Throughout our working years, we pay all kinds of taxes, income taxes, Social Security taxes, and Medicare taxes. But are you aware of exactly how Medicare taxes are calculated and how much that you'll be contributing to Medicare? In this video, I'll explain. Let's begin by looking at how our Medicare taxes are actually calculated. First off, when they calculate for Medicare taxes, they're looking at all of our wages that we're getting from our employment. They're also looking at what is called the Railroad Retirement Tax Act compensation. So those that are receiving those benefits, that's also subject to Medicare taxes, as well as self-employment income. So people that have their own businesses or 1099 commission type of wage earners, they're going to have taxes on that self-employment income. So this is what the government is looking at. And so right now what happens is 6.20% goes into Social Security. Your employer will match that. That's that 6.20%. Now, Social Security income does have a threshold to it. And right now, up to $160,200. And by the way, I'm shooting this video May the 3rd of 2023. That number usually goes up a little bit every year, but for this year, it's $160,200. So all of our income up to that limit is going to be subject to Social Security taxes. So we pay in, the employer matches it. Now, if you're self-employed, you'd pay that full 12.40%. Now, when it comes to Medicare, here's the difference. Medicare right now taxes 1.45% that we pay into Medicare, and then the employer has to match that. And there is no cap on that whatsoever. So all the money we make, we know that 2.90% of those dollars are going to be going into fund Medicare. And so what happens, though, is that then they set another threshold. So basically, everyone's paying in at least 2.90%. But then what happens is the government has what they call an additional Medicare tax. So we have this additional Medicare tax. And what this is for, the rate is actually 0.09%, so almost 1%. And so what happens is if we're a single filer and we make $200,000 above 200,000, or we're a married that files a joint return, that number is 250,000, then all the income above those limits are going to be subject to this additional Medicare tax of 0.09%. So all that income then is going to be totally taxable. That would be what, 3.80%. Now keep this in mind. The employer does not have to match that. Employer just matches just the normal 1.45%, which has no cap. So anything that's above that with that additional tax, again, employer is not responsible to match that amount. Okay, so that's how it's calculated. Hey, just real quickly, if you're finding this video to be helpful, you can like, comment, and subscribe. And if you do so, that'll let YouTube know that this is helpful information, and they'll send it out to others who also need to learn about Medicare. So to begin with, let's talk about how we calculate the amount of Medicare taxes that we're going to pay. And so when the government figures out Medicare taxes, we would call these FICA taxes or self-employment taxes. But basically, it is all of our wages will be subject to Medicare taxes. If someone is receiving a Railroad Retirement Tax Act compensation, that money, again, will be subject to Medicare taxes, as well as self-employment income. So all the money that actually is going to be taxable for income purposes here, and these items are going to be subject to the Medicare tax. Now, I just want to explain something and make a quick comparison between Social Security taxes and Medicare taxes, because they are different. Now, again, they're going to look at the same income here, but for Social Security right now, if you work for someone, 6.20% of your income is deducted from your payroll, and it is going into Social Security. Your employer matches that 6.20%. But there is a cap on income for Social Security purposes, and that cap changes every year. I'm shooting this video May the 3rd, 2023, so if you're looking this in future years, it would be higher for sure. But right now, the cap on income that's subject to Social Security taxes is $160,200. So anyone that has income above that, it would not be subject to the 6.20% or the match by the employer. Okay, here's why I share that with you. When it comes to Medicare, there is no cap. Okay, Medicare tax right now is 1.45%, and again, the employer matches that 1.5% with no limit at all. Okay, no limit. So although our income is going to be subject to that 1.45%. But what happens is this. Then they set what they call an additional Medicare tax. And by the way, if you're self-employed, you already know you'd pay the full 14.4 and the full 2.90%. All right, so this additional Medicare tax, here's the way that is calculated. What they do, so that's that additional Medicare tax. And so if you're a single filer, you file a single return for all this type of income that is above $200,000, you have to pay an additional 0.09%, almost 1%. If you're a married couple that files a joint return, then anything above $250,000, that income would be subject to the additional 0.09%. Now, if you're working for someone, they don't have to match those numbers. That is just you. They're still contributing their 1.45%. So up here, we have a full 2.90%. But if I'm above these particular thresholds, now we have an additional 0.09%. So this group of people, at this point, their income up here, it now will be subject to that 3.8%. So that's how the calculation is going to work for determining what your Medicare taxes are going to be. So the next issue I'd like to address would be the benefits of us paying into this Medicare tax system for all of our life. And so what Medicare does is this. Medicare is broken up into two parts. Parts A and Parts B. The A side of Medicare would be the inpatient side of Medicare benefits, and this would be primarily hospital, skilled nursing facilities, as well as hospice care. The B side of Medicare is everything that would be on the outpatient side, as well as all doctor services, durable medical equipment, and home health care. Okay, that's the two parts of Medicare. And so what's the benefit of paying the Medicare taxes is this. We actually, once we go on Medicare, and just so you know, most people are going to start their Medicare at 65 unless they're on disability. And so what happens at 65, if a person decides to take Medicare, they will actually get Medicare A at 0 premium. Now, they'll have out-of-pocket expenses if they go to the hospital or skilled nursing, but they're not going to have to pay a premium. This is a 0 premium for Medicare A. It's called premium-free Medicare, and it is for life. Okay, so that's the benefit. Now, to show you the value of Medicare A, because some people don't get Medicare 0 premium because they've not paid into that tax system long enough. Now, as long as we've paid in for what's called 40 quarters, which is basically 10 years worth of work, again, then we're going to get that Medicare at premium free. But those that don't have 40 quarters or cannot get the 40 quarters from a spouse, either an ex-spouse, existing spouse, or even a deceased spouse, if they can't get the 40 quarters, they actually have to buy Medicare A. And so right now, anyone that has 0 to 29 quarters, they would actually have to buy Medicare A this year for $506 a month. We're talking $6,000 a year actually to have that hospitalization insurance. If they have anywhere from 30 to 39 this year, they would pay $278 a month. So as you can see, we are getting some benefit by putting money into the Medicare tax system, because once we retire and we go on Medicare at 65 or beyond, then there'll be no premium for us for Medicare A. So we are getting really a great benefit, because Medicare A insurance covers us very well in the hospital, skilled nursing, as well as hospice care. All right, now when it comes to Medicare B, it is not going to be free, but with our 40 quarters, we're eligible to be able to purchase Medicare Part B. Now, right now, people who are on Part B pay $164.90 for their Medicare Part B. But for the A, it will be free because we paid into the Medicare tax system. Hey, if you're finding this video helpful, I want to invite you to go right up here and actually click on a link that will allow you to watch what I call the Medicare Essentials Workshop. It's a workshop that I did that really is going to show you everything you need to know about Medicare from A to Z, how to enroll, when to enroll, and the plan options for you. So go to that link and check it out. Now, let me conclude by mentioning something that really is a surprise for a lot of people. as they retire and go on Medicare, and we just call this a surprise Medicare tax. Now, we've talked about how our income is going to be subject to Medicare taxes depending upon how much we make, and basically it's unlimited. The most we'd ever pay, of course, would be 3.8% for those who are at high income. But everyone else, 2.90%, half paid by us, half by the employer. But this surprise Medicare tax comes up when you decide to go on Medicare. And so what this surprise Medicare tax is, it's actually an acronym called an IRMA. And this stands for Income Related Monthly Adjustment. That's adjustment amount, okay? There's your acronym. IRMAA, Income Related Monthly Adjusted Amount. Now keep in mind, this means we're going on Medicare. And so what this means is that based upon your income, you may pay more than what's called a standard premium. Just in my last slide, I showed you that Medicare A is zero. This year, 2023, Medicare B premium is $164.90 a month. Now, when someone's on Social Security, that comes out of their check. When they're not, they just simply bill you on a quarterly basis until you start taking Social Security. So B has a premium. And so what happens when we go on Medicare, and we've retired and gone on Medicare, what's going to happen is because of our income, this B premium could be higher. So let me explain why I'm saying this is a surprise. So again, let's say someone starts Medicare in 2023. What's going to happen, what the government will do is they're going to look back at their 2021, we call this modified adjusted gross income. If I'm on Medicare in 2024, they're going to look at 2022. So they do this every year to establish what our Part B premium will cost us. And so they always look back 2 years. Now, the modified adjusted gross income, real simple calculation for Medicare purposes. It is line 11, which is your AGI, adjusted gross income, plus line 2A, which is a tax exempt interest. And so they add those two numbers together, and that becomes, this number here, becomes your modified adjusted gross income. So here's the way it works. We could have an adjustment to our Part B as well as to our drug plan if this modified adjusted gross income is above a certain threshold. Again, this year, the thresholds are this. For a single filer, if we are at $97,000 or below, we will not have an IRMA. A married couple that files a joint return, that number is $194,000 or below. Again, they would not have an IRMA. But if I'm going to be above these numbers, above these thresholds, then what happens? I have to pay this IRMA. Okay? And I'm not going to get into all the details of those IRMAs, but I'm going to share this with you because it definitely surprises people. And so this IRMA ranges anywhere from about $80 to about $480 added to our premiums for our Medicare B as well as to our drug plan. And so those of you that are going to have high income, even in retirement, this is something that you're going to have to address and have to actually deal with for sure. And so that's the surprise tax. So again, if we're below $97,000 single, below $194,000 as a couple, it's going to be a non-issue. But if it's going to be above that, you're going to pay additional money. All right. And so again, that IRMA is attached to my Medicare B premium, and it's attached to my Medicare D premium. And again, the first level, because we have these different thresholds of income, the first level is right around $80, and the highest level, there's 5 different levels of IRMAs, the highest level is right about $480 additional a month, all right? And so this is just something that we have to address. Now, what can happen is this. We could have someone that's going to start Medicare in 2023, and Medicare is going to look back at 2021, but let's say they retire in 2023 and their income falls below these thresholds. Well, then what we can do is we can appeal the IRMA. We can appeal it. We have a life-changing event. There's 8 possible life-changing events. The most common is work reduction or work stoppage. But if we have a life-changing event, one of those 8 qualifying events, we can actually fill out paperwork. It's called an SS-44 form, and we can submit that to the local Social Security office appealing the IRMA. And if our income is going to be adjusted down because of that life-changing event, then they will actually drop off the IRMAs. And keep in mind, this is something that's going to be recalculated every single year. All right? And just so you know, 93% of all people just pay the base premium. So 7% of the population will be subject to IRMAs. All right, so that's the surprise Medicare tax.